This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices dropped on Thursday, reversing earlier gains, as news of top exporter Saudi Arabia giving up its crude oil price target in preparation for expanded production weighed on the market. Brent crude futures were down 55 cents, or 0.75%, to $72.91 a barrel, while U.S. West Texas Intermediate crude fell 55 cents, or 0.79%, to $69.14 per barrel as of 05:02 GMT. Saudi Arabia is preparing to abandon its unofficial price target of $100 a barrel for crude as it prepares to increase output, the Financial Times reported on Thursday, citing people familiar with the matter.
U.S. oil inventories fell across the board last week, the Energy Information Administration said on Wednesday, drawing down more than expected and with crude oil stockpiles hitting their lowest level in nearly 2.5 years. Crude stocks dropped by 4.5 million barrels to 413 million barrels in the week ended September 20, the AIA said, compared with analysts' expectations in a Reuters poll for a 1.4 million barrel draw. U.S. crude inventories, excluding those in the Strategic Petroleum Reserve, were at their lowest last week since April 2022.
Moving on to the top news in the energy sector.
Singapore jet fuel imports for September arrival are slated to hit a multi-year high, ship tracking data from LSEG and Kpler showed, as China exports rise and lower output in Southeast Asia's aviation hub forces refiners to buy more. Kpler data shows imports are set to rise to 2.13 million barrels for September, the highest level since April 2020, and up from 345,000 barrels in August. LSEG data shows imports climbing to 2.1 million barrels, a three-year high by its tally. China jet fuel, kerosene exports to Singapore are set to hit a four-year high this month, according to Kpler, with the margins attractive relative to other refined fuels.
U.S. shale oil and gas executives are moving to electric rigs and fracking to reduce diesel emissions, but grid infrastructure and cost challenges are hurdles, the Federal Reserve Bank of Dallas said on Wednesday in its quarterly energy survey. The survey of Texas, Louisiana and New Mexico executives also revealed third-quarter oil and gas production was mixed, with data suggesting oil production increased while natural gas production decreased. Nearly a fifth of oil and gas executives said they have fully converted to electric-powered drilling rigs and hydraulic fracturing, a way to cut pollution from diesel-powered equipment. Next, we have the top news in metal markets. Copper prices rose on Thursday, rebounding from losses earlier in the session, as Chinese officials pledged more policy measures to spur growth. Three-month copper on the London Metal Exchange rose 0.6% to $9,869.50 per metric ton by 0631 GMT, moving closer to the 10-week high of $9,913 it hit in the previous session. The most traded November copper contract on the Shanghai Futures Exchange rose 0.1% to 77,500 yuan, $11,042.40 a ton.
Prices of iron ore futures surged on Wednesday to their highest levels in more than 3 weeks, as a fresh batch of monetary easing policies from top consumer China boosted market sentiment, while lower global supply also lent support. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime trade 4.19% higher at 709 yuan, $101.02, a metric ton. The contract hit an intraday high of 730 yuan and 50 fen, its strongest level since September 2nd. The benchmark October iron ore on the Singapore Exchange was 1.7% higher at $96.35 a ton, as of 0710 GMT.
We will now look at the top news in the agricultural sector.
Winter wheat sowing rates in Russia have fallen to an 11-year low due to drought in key producing regions, clouding the outlook for the 2025 grain harvest, the Sovcon consultancy said on Wednesday. As of September 20, 8.3 million hectares have been sown with winter grains, compared to 9.3 million hectares a year earlier and the 5-year average. This is the lowest figure since 2013, Sovcon said. It said a slow sowing campaign in the southern and Volga regions, where it is lagging behind last year's figures by 0.4 million hectares, set the preconditions for a relatively low harvest next year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.